Hey guys, it's me Yongik. So today I'm going to share with you guys this one stock that is going to blow your mind away. Alright, this stock is called UnitedHealth Group, and it's one of the top 30 companies in the US, making them part of the Dow Jones Index, right? If I'm not wrong, they are under insurance Dow Jones Index, which is also what Mary Buffett also says. She's actually trying to understand insurance company, but she's also unable to understand because they are way too complex, alright? So, I'm also not going to go so in-depth into insurance because if the professionals can't do it, I can't do it too, right? So, but anyway, I'm going to share with you guys why there's an opportunity, that I feel there's an opportunity. Alright, so what happened was that there's a drop over here of 13%, which is $33 drop over the past, I think 5 trading days. So, what happened? Oh well, before what happened was that even if you go to investing.com, right, a free platform to use, even if you go there, the technicals already indicate that they will drop, and true enough, it did drop, right? There's no science to technical analysis, but somehow it did happen. They indicated it right over here, and then it dropped down. So, what happened to the stock? So what happened was that UnitedHealth CEO says that Medicare for all should be destabilized, would destabilize the nation's health system. So basically, Bernie Sanders unveiled a new bill that will create a government system to run health insurance for all Americans. Meaning to say that because we all know that election is coming up next year, and that's why the Democrats are trying to come up with something that will appease the majority of the public by saying insurance for all. You can all have insurance, free healthcare insurance, and then probably he will get the vote and be the president or something, right? So that's what they're trying to do. But to be honest, I feel that that's a little bit overstating. Why? Because let me just go to here, because studies from this George Mason University suggest that, if they would implement this, it will cost the federal government around $32 trillion over the next 10 years. And we all know how much debt the US government is raking up in the past few years, especially after Donald Trump took over. Now, I'm not too sure if this is the very, very reliable one, but it's saying that it's a real-time debt. The US actually owe $22 trillion in debt already. If they were to implement this healthcare system, alright, the debt level is gonna blow off the roof. Alright, it's a bad news, and I honestly think whatever Bernie is saying is just over-promising to the entire public just to get votes. Alright? Now, what happened was that UnitedHealth, on this date, which is last night trading day, UnitedHealth actually reported earnings and raised their 2019 EPS outlook. Revenues grew 9%, earnings from operation grew 19%, net earnings grew 24% year over year, adjusted earnings grew 23% year over year. Everything is just good. Alright, there's no other place. I can't even put a rate into it because everything is good. Now, the CEO actually mentioned that with improved 2019 performance, the company has increased their earnings outlook from earnings EPS from $13.80 to $14.05 per share. Now, this is actually a projected growth of 16%. Alright, so they're actually telling you that they will project growth, the company growing at 16% for earnings per share, which is kind of like an organic growth lah. So now let's take a look at earnings. So let me just quickly bring you guys the earnings to see the earnings. So actually I have it here. So if you can look at earnings for the past few years, everything is green, everything is good. So that's the reason why it's the top 30 companies in the US stock exchange, because they are performing really, really well. And then last night it actually dropped $9 plus, and hence you see the huge drop over there. So what is UNH? Now, actually, until now, you guys still don't know what's UNH. So let me just quickly tell you guys what's UNH. So for me to tell you guys UNH, let me bring you this Excel spreadsheet that I actually made. So this spreadsheet is a calculator that calculates every single thing for me. Alright, so what happens is that I just key in the stock ticker here, and everything will come out UNH, the price, the after hours, everything. UNH trades at New York Stock Exchange. It's a healthcare insurance company. So it's a healthcare and insurance. It's not those accident insurance, or it's purely just healthcare. The CEO is this, the number of employees, 52 weeks high, 52 weeks low, outstanding shares, PE ratio, forward PE, PEG is 1.2, so you can see the PE ratio is 18.12, so it's slightly overvalued. The PEG is 1.21, so it's also suggesting slightly overvalued. And that's why we're looking at it, because the share price has been coming down a lot the past few days, and is coming close to undervalued situation already. Now, so the company profile is that UnitedHealth is the largest private health insurance provider in the United States, offering medical benefits to nearly 50 million members across US and international businesses. So you can see that they're actually a very, very huge company. Now, if we quickly go through the business analysis, because I'm trying to keep this short within 10 minutes, so we can see that for this I actually done it up all for you guys already. I feel that UnitedHealth has intangible assets because it has a strong brand. Their network effect is not like Facebook, how they got their network effect. Their network effect is in the sense whereby they actually have over nearly 50 million members, which allows them to calculate a very, very good probability of how, the premiums and how much they should collect, etc., etc. Then obviously they have the monopoly skill because they're the largest healthcare provider. They have cost advantage, they have switching costs, and then they're able to implement switching costs because, all of us buy insurance, health insurance especially. If you actually buy a health insurance, you're more likely stick to the same one every single year than to be changing every other year, because it doesn't make sense to keep changing. You in the end lose count of it, lose track of everything, alright? So that's that. Pricing power also, yes, because everyone's insurance, no matter what, they'll still buy, and then there's nothing you can do about it to make them lower their price. So for the macro and micro analysis, there's no presence of technology risk. There is no presence of inflation risk. However, we do see some political legal risk that's coming out because of Bernie Sanders. And then there's no presence of specific people risk because these companies are very, very well established already. Now here's the interesting part whereby the financial assessment and the red flag indicators is all done up for you. It shows you there's positive revenue, positive operating cash flow, positive free cash flow. Now it also shows you that gross profit margin is not consistent above 40%. It also shows you that debt to equity ratio is more than 0.5. And it also shows you that free cash flow yield per share is less than 5%. But for the red flag indicator, we can see that there's red flag for quick ratio and there's a small red flag for current ratio. So those are things that we should look at. And to be honest, I'm not too worried about these because they are financial companies, financial institution companies. So they sometimes have to pay out premiums to, on some years they have to pay out huge premiums to, customers and all. And some years they actually collect a lot of premiums. So that's actually kind of like a bit of fluctuating as well. But again, I'm not very, very into insurance. I do not really understand insurance super well. So I should just stick with this current explanation first. Now the confidence rating that I generated out is 8 upon 10 upon all of this stuff that we've seen over here, and the growth entry price is $200.78. UnitedHealth does give out a dividend, that's why its dividend entry price $69, and if UnitedHealth actually closes down tomorrow, the amount of money you get back as a shareholder per share is $41.67. Now if we take a look at the growth tab, how we calculate all these $278 is that we run it through all of these things, discounted cash flow model, PEG, PE ratio, and then Benjamin Graham final adjusted formula, etc., etc. Then we determine the most stable value, which is the average of all these values to correctly identify what we feel like what will be a very, very good price to enter in the stock market, enter into UnitedHealth, which is this. And we also projected a 15% growth rate only. That's all we project. Whereas the company actually projected a 16%. We only project a 15%. So we can still see that company the adjusted entry price is $200, which is very, very near our current price already, because currently it's trading at $220. So it's actually very, very near. Now next, if we go to dividend, we can see that, oh, by the way, you see the growth tab, EPS has been increasing consistently. Alright, then you can see dividend going up all the way, every single year is going up. It's dividend aristocrat, which I would call it. It's very good. I like it. If you hold it in long term, you potentially make so much money on dividend itself. For assets, it's simply just that you will get back around $41.67 if, it closed down already. Now, if we run it through the key metrics, which is also an indicator from Morningstar. So we actually take everything from Morningstar. That's why hence the data feeder. You put everything from Morningstar, you put it in. Quickly tell you which one is pass, which one fail. So you can obviously see that gross margin fail. You can see that operating margin fail. But every other thing pass, pass for revenue, pass for, operating income, pass for net income, earnings per share, everything all is pass. Then current ratio we can see here is fail. Debt to equity ratio we can see it's now getting above 0.5. For all these definition, please go up to Investopedia and read it up. I'm not going to explain it here because I'm trying to keep this video short. So we also see that, key things like return of equity and return of assets also we indicate for you whether it's pass or fail. So it's very easy, very convenient, and everything is done. So once again, let me just go back to the slide. So on the technical perspective, we can see that $200 is our intrinsic value over here. We can see currently UnitedHealth is forming a lower high and lower low, which is suggesting a bearish trend. And we can see also currently it's also at this support line here. So I actually think that UnitedHealth might go down a little bit more. And because usually sellers want to stop out all the buyers, right? And so they will probably sorry, my mouse. Okay, so they probably actually sell a bit more downwards before coming up. But if it does keep going down, this intrinsic value is just nice at this resistance line over here, which makes it a very, very good support line. So in my personal opinion, I feel that $200 is a good value for me to enter the UnitedHealth, especially when it's the top 30 companies in the US stock exchange. I like it. I'm probably going to hold some positions to it. So yeah, thank you for tuning in, and I'll see you next time. But before I go, please subscribe to my YouTube channel. I'm trying to start something here. I actually created videos for the past few months. Like for example, Lyft. I told people don't enter the Lyft. I made analysis on it, why you should short it. But I didn't tell people really short it. I'm just telling you why you shouldn't buy it. And true enough, once the IPO, it came all the way down, all the way. Alright, so that's it from me. Thank you very much for tuning in. I'll see you next time. Bye bye.